Getting crowded in here. That's the title of our latest chat today. And specifically as this chart, referring to this chart, in which it's a chart showing basically the investment by the hyperscalers in different funding channels. And as you can see, on the investment grade side, and AI linked debt issuance is making up about 50% of the of the new debt issuance. It's making up about 38% of the new junk bond issuance, and then making up about 87% of the new VC investment. So what we're seeing again is things what we talked about previously is just all the massive amount of investment by all the hyperscalers are really crowding out all other parts of the capital markets. And this has real implications for the things that we're involved in. And as we said before, excuse me, commodity cycles are just big CapEx cycles, really. And to the extent that they're getting crowded out from the capital markets by everything AI, the ability for all parts of the different commodity producers and different sectors that desperately need capital to grow is getting challenged. Darren, what are your thoughts on this?
I think in addition to it's getting crowded, it's also getting risky out there. So one chart that isn't on here is, the credit default swap positions on the hyperscalers over the past year, just over year, has gone from about 2 billion to 13 billion, so over six times. And it's kind of ironic from our point of view that, mined materials, primarily copper, is necessary to feed kind of this AI data center demand. But yet the attention to that supply has been somewhat of an afterthought of where all of this supply is going to come from. And as you would expect, nearly everything that goes into powering a data center has somewhat rocketed higher. Copper is at or near record highs. You have aluminum at 4-year highs. Some of these lesser known metals are also ripping higher. And we just think, that'll be more acute going forward as the supply will just not be able to keep pace with demand, primarily because of this lack of capex.
Right, and I think it's, while everyone focuses on what's going to change and particularly, as it relates to AI, it's also important to focus on what's going to stay the same. And again, it's the same type of lack of investment that we've seen for the past 2 decades in the things that we're talking about, energy, mining, as Darren pointed out. And again, it sets up our thesis for hard assets and commodities and natural resources outperforming going forward because again, it's been starved for CapEx and it continues to be starved for CapEx. And I think, we've talked about in prior webinars that big commodity super cycles are really just big CapEx cycles. I think, and Jeff Curry of Goldman Sachs, ex-Goldman Sachs, pointed that out, and I think very astutely. And if that's the case, again, that CapEx is not going to be difficult to come by with the hyperscalers really dominating all parts of the capital markets. And
I would just say, from our perspective, outside of just, what is mined, I mean, we focus a lot on the energy side, and we've been saying for a long time that AI and data center can only advance at the pace that energy allows. So your ability to procure energy to power your data center, but that transcends also, as we discussed earlier, into the necessary metals that go into it. So it's not just an energy issue. It's also a metals issue. It's it's a crew issue. There's a lot of different things that need to kind of come into place to make this happen. But it starts with with kind of the minerals and power.
right, and I think it's also people are watching this and they're assuming that CapEx or those dollars will flow essentially back to to the sectors that we're referring to. That's not really what we're saying. We're saying essentially is that everything is going to one side of the boat, and what's left behind is gonna suffer in terms of their ability to grow and their ability to serve a growing demand. So that's really more what we're saying is that it not necessarily those dollars will flow back to the sectors that we follow, but there's an important takeaway from the fact that these dollars are not being spent by the sectors that we follow. So with that, we'll wrap it up and we'll see you next week.